Good morning, and welcome to the Haven Financial Group radio show. Happy 2026. Thanks for listening. Feel free to give us a call to 612-504-8400 or visit us online at havenfinancialgroup.com. Check out all our educational classes, kicking off the new year, and all the classes, Medicare Made Simple, Social Security and Tax, investment classes, and many others. So go to our site. We'd love to have you. We'd love to visit with you. We'd love to meet you this year on any of these retirement topics that are so extremely important. And Kim, good to be with you. How goes the battle this year?
Thank you, sir. So far, so good, but we're early.
We are.
That's for sure, but it's great. And we've got the holidays behind us. Obviously, everybody headed back to work and back to school and whatnot, come this Monday. And this is a great time of the year, it seems to me, Larry, for people to, number one, like you said, take a look at some of those free upcoming classes that are being offered, because it's great to sort of get in mind some educational seminars that you can attend for 2026. But in addition to that, obviously, this is the time to really start putting together, your portfolio, where you want to be by the end of the year. Maybe this is the year you're going to retire. Maybe you've decided that 5 years from now is where you're going to retire, and this is the perfect time to start all of that planning. So you can give the folks at Haven Financial Group a call at 612-504-8400. So if anything rings a bell with you as we continue to talk today, we will continue to give you that phone number. Kyle Thomas is with us this morning. He is a certified financial planner at Haven Financial Group, and it's great to have you along, Kyle. Happy New Year, sir.
Thank you so much. Happy New Year to you as well.
You bet. We're going to talk about keys to confidence in retirement investing, why your retirement investments shouldn't care about volatility. Don't forget important perks of retirement accounts. Maybe this is the year that you're going to get yourself into a retirement account. Understanding investment strategy that works for you. And finally, keeping your emotions out of your portfolio management, which sometimes is a little easier said than done. And I think you guys know that to be true, because I'm sure that you deal with lots of folks who can be emotionally attached to their portfolios for sure.
Yeah, let's be clear. Your retirement strategy isn't just about chasing the market or maximizing all these big returns, trying to hit a home run, and all that's great. If you do, great. But it's really ensuring that you have the income. I can't stress enough, I've said it over the years, mailbox money, the income coming into the household, income to do what? To provide for your needs like health care, shelter, a variety of those things, and then income to provide for the wants in retirement. You probably want a lifestyle, whether that's fishing or hunting or country club or whatever your hobbies are. We got to have income for all that, and we need to factor in healthcare, which is underestimated by so many people. So it's really, let's start it out by saying, let's put together a plan. A failure to plan is a plan to fail, and none of us want to fail. But oftentimes we do, because we don't have a plan, or we just simply don't have a partner that we can lean on to make sure that we're doing the right things.
Mm-hmm. All right. Well, when we talk about that predictable income stream, it seems to me for retirees, one of the real threats is volatility, whether, it's in the market, the economy, and how that can impact one's money coming to the mailbox. So Kyle, maybe you could talk us through how you suggest that your clients invest to make sure the volatility is not an issue for them.
Well, yeah, first of all, we have to make sure that our portfolio is not reliant on what the stock market is doing. That tends to be the most volatile of the investment options out there. We got stocks and bonds and fixed accounts, and the stocks is definitely the most volatile. And we don't want to be, handicapped by whatever that market is doing. We need to make sure that we have something that can, it's a complement to what the stock market's doing, but we want to have consistency in there and stability within our portfolio. Because if we're relying on the market to be up 10% each year, and then if it happens to go down 20% one year, because that does happen,
sure,
that can really hinder our withdrawals and maybe you're not able to take out that money because you wouldn't be able to have growth then in future years. And I like to just kind of generally say, uh, every 1 out of 3 years, the market is maybe down.
Mhm.
And that's kind of got a good track record of just going back over history. And we need to plan for that in our retirement planning. And we even take it a step further and do bad timing as a scenario. And that is looking at your retirement in the first 2 years of having really bad returns. What does your retirement for the next 30 years look like if we have a negative 25% return in the first year, and then a negative 10% return in the second year? How does that impact us? Are we able to live our life still with our needs and wants? And gets into the sequence of returns thing, because those compounding returns can really impact you on the positive side, but also on the negative side, especially if you have those negative years early on.
Sure. Talk to us a little bit more about planning. Like, for example, one of the things that the volatility of tax, the tax burden, that's something that you certainly want to make sure that it's consistent for you.
Absolutely. And when it go back to that retirement planning piece I was talking about, the tax planning is a major part, and he plays a huge role in your retirement because, well, Minnesota, it's a high tax state. So we have the federal side, but we also have the state side. And if you're going to be moving to a different state that maybe doesn't have income tax, that changes the plan quite a bit. But if you're in Minnesota, it probably makes sense to take a look at maximizing your tax efficiency, especially in those earlier years of retirement, because like most people, they have IRA balances that take up most of their portfolio. And there's going to be required distributions from there. So we probably want to create tax efficiency in lower tax brackets in those earlier years of retirement, rather than being forced to take out larger amounts in later years of retirement at higher tax rates. We especially have some, more affordable tax rates for these next few years with the big beautiful bill from last year. So we just need to make sure that we're staying on top of that and not missing any opportunities.
Sure, absolutely. Larry, one of the things that you say so frequently, but this is so true, there are going to be changes in life. Life does not always go the way we plan it. How do you protect against those changes?
Well, life is going to your plan's going to have some modifications. It's not set it in stone and leave it. And we should be revisiting this, several times a year, or for sure every year, if you're getting the adequate attention from whoever you're working with. Kyle, he was talking about taxes. I've said it before, at Haven Financial Group, we're very big into forward-thinking tax planning. We just came off of fourth quarter. And of course, fourth quarter, we did many, many, many Roth conversions. We made decisions, clients made decisions, educated decisions on maybe I should take an IRA distribution to fill that 12% bracket up. Maybe I should be drawing off my brokerage account with zero capital gains tax. Tax efficiency is so important. You worked hard for all those dollars. We want to draw off the right accounts at the right time and make good tax decisions. Lance, our CPA, and his assistant, Melissa, we're now into 2026. Now people are going to start thinking about tax preparation. Now's the time. And think, if you're listening and you go, wow, like many, we don't even talk to our tax preparer anymore. We just drop off and we pick up. And we don't even have a conversation. We don't even talk about, why is it every year we owe so much money? Maybe you don't have enough withholdings. All the grumbling that we hear every year by folks, the same thing every year. Well, my solution would be, why not work with somebody else that can help you fix the problem, where you can have your taxes prepared for a reasonable price. Lance has been a CPA for years. He's very reasonable. Nothing's free. Where the planning went on throughout the course of the year, and now you got your taxes done. There was no surprises, no negative surprises, maybe only good surprises. And you actually leave the office who you actually had a conversation with, a real live conversation with a whiteboard that he explained things, and you walk out with a smile on your face because there was no negative surprises Doesn't that
Mhm.
sound a lot more appealing than the alternative?
It absolutely does. And it sounds like to me it protects you from volatility because
It
you know
does.
what's coming. Right, right.
And volatility can also breed negative emotions,
Mhm.
and which isn't healthy either.
No.
So these are all things that we want to, we're not against the market, but having an understanding of, you know what, we probably shouldn't have this much risk. We probably should protect some principal. We don't have any in that category. What is the right balance of liquidity in principal investments that cannot be lost or stock market risk investments?
Mhm.
What is that right balance for you? And if you're listening and you can't answer that or you have no idea, why not figure it out this year?
Yep. This is the year to do so. 612-504-8400. That's right. Let's put together a portfolio that doesn't care about volatility, doesn't care about the ups and downs, a consistent portfolio for your retirement. Again, that number is 612-504-8400. That's how you reach the folks at Haven Financial Group. When we come back, don't forget important perks when it comes to retirement accounts. Maybe this is the year that you have not been putting enough in your retirement account and you want to change that, or maybe you haven't been in one at all. Let's talk about that on the other side of the break.